we got a new backdrop. GoodRx acquires Healthy Nation, Zoom is set to climb 40% in share price, and Alibaba is undervalued right now. All this and more on this week's Invest Roundup. Hey, it's your boy Terry and this is Invest Roundup. Tesla, Apple, Amazon are the stocks to watch this week. First quarter earnings season is still ongoing and Tesla had the world waiting with bated breath when they announced their results on Monday. And speaking of Tesla, guess who will be hosting Saturday Night Live next week? I'll give you a hint. Ladies and gentlemen, Elon Musk. Yes, that's right, their first non-actor and non-athlete to host the show. Probably. You might want to keep an eye on Tesla stock in the next 2 weeks now. Anyway, let's get into this week's news. Disclaimer. Whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we think you need to know if you've invested in the stock market or if you intend to invest. First news item. GoodRx is about to become GoodRx? More GoodRx? Okay, anyway, healthcare company GoodRx is upping their game. For those of you who've never heard of them, GoodRx is an online healthcare company with a free-to-use website and app which helps users find the most affordable doctor's visits and prescription drugs. They are a hit. They even recently announced that they will soon be providing free medications through community clinics across the states to help low-income patients. The company went public in September last year after raising $1.1 billion in its IPO, and they are backed by a private equity firm, Silver Lake Partners, which holds a 1/3 stake in the business. There was such strong demand for their stocks because they opened their trading at a whopping $46 versus the price they were offering during IPO, which was $33. But just last week, the company raised their stakes by expanding their niche and acquiring another company just 7 months after their public listing. The company is called Healthy Nation, a health video company. What these guys do is basically offer thousands of premium videos on a wide range of health topics such as disease conditions and nutrition, which are created in partnership with a network of medical professionals. According to GoodRx, if this deal goes through, Healthy Nation will be a good platform for pharmaceutical manufacturers to reach out to their targeted customers based on the videos they watch. The deal is expected to close by the end of the second quarter, but guess what? The market hasn't reacted to this news yet. At their current business performance, the intrinsic value for GoodRx is at $45.10, but their current share price is at $39.58, which means they are still undervalued. Wink, wink. Second news item. Zoom might be sliding right now, but not for long. Zoom looks like it's about to zoom into space. Okay, just 2 weeks ago, Nasdaq posted an article saying that Zoom stock is in a vulnerable spot right now, which, looking at the facts, made sense. In 2020, Zoom's stock has gone through the roof from the pandemic. The stock even fetched $588 per share in October. Well, yeah, everyone was locked inside. All birthdays, happy hours, and business meetings have been happening on Zoom. However, now that the pandemic is very slowly winding down, Zoom's share price has also been sliding down rapidly because investors are worried people won't rely on the platform as much anymore. But last week, Bank of America announced that this could not be further from the truth. According to the bank, Zoom will not only get away unaffected by the vaccine rollout, but the shares could potentially soar again this year, right back to its spot at the top. Thanks to the growing number of companies who'd adopted work from home, and most importantly, Zoom is not letting their users get away that easily. Early this week, Zoom has rolled out a new suite of features for their video conferencing and webinar feature. This includes annotation tools and a more extensive set of emojis, so users can now have a better experience using their platform. I'll tell you this though, emojis or not, the stock is undervalued right now. Compared to the intrinsic value of $394, the share price is currently standing at only $336. So, if you are to believe Bank of America, this could be a good chance. And speaking of good chances, now is also a good chance for you to smash that subscribe button below and show some love for your boy Terry here. We will deliver you more important investing news on a weekly basis, so you don't want to miss out. Next news item. Blackrock is letting go of their Alibaba shares, so should you? The Chinese government's regulators are not backing down. Not even a month after Alibaba was slapped with a $2.8 billion fine, the same group of regulators who investigated on the company is at it again. Their target this time? One of Alibaba's joint venture with a mineral trading company, Mint Metals Development, that was formed in 2015. According to Mint Metals, they have received a notice from the state administration about this investigation. But from what they can understand at the moment, the company's e-commerce cooperation is not violating any of the anti-monopoly law. Hence, there shouldn't be any damage to the interests of their customers and investments. And while this news did not really affect Minmetals or cause them to stay away from Alibaba, it has certainly spooked institutional investors. Some of them are now aggressively cutting down their holdings in the tech giant. Blackrock, for example, the world's biggest money manager, has been cutting down its holdings in Chinese tech stocks, Alibaba included, because of the ongoing regulatory tightening. If things get worse, they fear that the company could be sent packing. This also applies to other major Chinese tech companies such as Tencent and Meituan. According to an expert from Blackrock, with these tech companies gaining popularity and more market shares worldwide, it is likely that this scrutiny from policymakers will only get more and more harsh over time. So, they've decided, while they will still keep an eye on these companies' performances in the long run, they've cut down their holdings in these companies for now to scoop up other stocks that are likely to recover after the pandemic. Regulatory concerns aside though, Alibaba's share price based solely on their business performance is actually undervalued at the moment. Priced at $232 for now, the company will still have some ways to go before they hit their intrinsic value of $285. So, if you've been eyeing this stock for a while, it could be Alibaba buy. You know, like buying and selling. Get it? So, those are the 3 important investment news we had to share with you this week. Once again, we encourage you to get more information. If you would like to act on any of the companies we've shared about earlier, comment below and tell us what you'd like to see on the next Invest Roundup, and share this video with your friends, especially those who are invested in the stock market. We'll see you next week.